Hey everyone, recently there was a big announcement where CERC, that is Central Electricity Regulatory Commission, has given a final approval for India's third power exchange, and that would directly challenge the monopoly of IEX. Well, it is a well-known fact that IEX is the largest power exchange in India with a monopoly of nearly 95% in power exchange business. But after the announcement of third power exchange, there are concerns over IEX monopoly to get ended. IEX share price has already corrected nearly 50% from its peak and currently trading at levels of 162. So the question is, as an investor, what should you do with IEX share? So there were requests from many people, including Suketu, Matthew, RC, to analyze IEX after the announcement of new competitor. So I have created this video to give you my viewpoint. But again, it is not a stock tip. Do your own research before investing your money. And if you want me to research on any of the stock or financial topic, please mention it in the comments. By the way, I've added a quiz section in my stock related videos where I will give you a hint about the stock and you will have to tell me the stock name. I'll disclose the stock name towards the end of the video. So for today's video, here is the hint. This company is a dominant player in Indian auto glass market with a market share of nearly 73% in passenger vehicle segment. Its glasses are used in every 3 out of 4 cars and SUVs in India with clients including your Maruti, Hyundai, Tata Motor, Mahindra, Toyota, etc. Can you guess the name of the company? Well, I will disclose it at the end of the video. Alright, now let's get started. First of all, let us try to understand the business of IEX. Although I have already created an in-depth video on IEX Business in the past. So if you want to understand in-depth about IEX Business, then I would suggest watching the video. If I just summarize IEX Business, it provides a platform for buyers and sellers to buy and sell physical electricity via an online platform. So basically, buyers and sellers visit IEX platform and there's a bidding for electricity price. Once the price discovery happens, buyers are able to buy the electricity and sellers are able to sell the electricity. Now here you need to understand one very important point. Power trading is divided into two broad segments: long-term power trading agreement and short-term power trading agreement. The long-term power trading agreement, also called long-term PPA, that is power purchase agreement, constitute of nearly 86% of power trading where the agreements are as long as 25 years. Then there is short-term power trading that constitute 14% of power trading. Within short-term power trading, there is power trading in real time up to 11 days that happens on exchanges like IEX. This constitutes just 7.6% of total power trading. In simple words, the power sector where power exchanges like IEX operate has just 7.6% market share in the total power trading. So you can imagine the growth potential for power exchanges. And within that, IEX holds nearly 95% of market share. Now you might be thinking, why long-term agreements have such high market share and short-term agreements have such low market share? The reason being that in long-term power agreement, both buyers and sellers get the price visibility for a very long duration. Whereas in short-term power trading, the prices are volatile. So companies prefer long-term agreement. However, the energy exchange market in India is growing rapidly. It is because of improved efficiency due to increasing participation of both buyers and sellers in online power trading. Since FY18, power exchange trading has grown at a CAGR of 17.7%. Just to give you an idea, Indian power market is just 6%, whereas power market in developed economies is in the range of 30 to 80%. That shows the potential in Indian power market. So as Indian power exchange market become more efficient with use of technology, this sector would grow quickly. Now let us look at the details of new entrant in the power market and try to analyze how it can challenge IEX monopoly. So far there were only two power exchanges, IEX and PLIX, where IEX held nearly 95% market share, which is near monopoly. And it had a network of 7,000 plus registered participants with 600 plus power generators and 55 plus electricity distributors. The reason for near monopoly in the business is due to IEX focus on innovation and investment in technology to build a very efficient trading platform. Due to this, it attracted more and more sellers, and since there were more sellers, it attracted more buyers. And it built a very efficient price discovery model with competitive rates. Hence, it attracted more and more buyers and sellers. However, the energy regulator CERC was not happy with IEX monopoly in the energy exchange market. So now we have third player in this industry called Hindustan Power Exchange, that is HPX. HPX is promoted by BSE and PTC, that is Power Trading Corporation, with each having 25% share. It is followed with ICICI Bank with 9.59% holding. By the way, HPX has already started its operation, and HPX Chief Operating Officer Akhilesh Awasthi is claiming that HPX will be able to challenge the monopoly of IEX in no time. After this news, share price of IEX tanked to all-time low of 154 rupee. Now the question is, will HPX end the monopoly of IEX? Well, that is something only time will tell. It is not easy for a new entrant to challenge the dominance of an established player. And even if HPX is able to challenge the monopoly of IEX and manage to capture a good market share, the important question here is, will IEX lose its business or will it continue to grow? And that's where it is important to understand the growth prospect of the sector. Because as long as the sector is growing, all the companies will enjoy the pie from the overall growth. For example, let's say a company has 100% monopoly in the business, but the market size of the entire business is stagnant at just 100 crore rupee. Whereas, even if the company has 50% market share and the market size is, let's say, 10,000 crore, then which one would you pick? So at the end of the day, it is not just about the monopoly, but it is about the growth potential in the sector. And power exchange has a huge growth potential where nearly 86% power trading is still directly between power generator companies and state utility companies in long-term format. And after the addition of HPX, it will only improve the efficiency in the power exchange sector to provide the flexibility of short-term power trading and take advantage of market condition at different times. So that would help in overall growth of power exchange sector. Not only there is huge scope of growth in power trading, but the overall electricity production itself is increasing due to increasing need for electricity. Especially there are 4 mega trends that are shaping the power sector globally. First mega trend is decarbonization, that is deployment of lower carbon technology, which is your renewable source of energy like wind and solar energy. Then second mega trend is decentralization, where power production is not just limited to a few players. For example, due to installation of rooftop solar panels, many small players are also generating electricity. They can use the exchange platform to trade electricity. Then third mega trend is digitization, where there is large scale upgradation to smart metering, IoT based application and smart grid technology that is driving digitization of power distribution. And fourth mega trend is democratization, where end consumer would be able to choose their electricity provider. It won't be limited to a particular state. This would establish energy as a service concept in the country. Hence, overall, there is huge scope of growth for power exchanges like IEX. Yes, in the short term, there could be an impact of competition from HPX, but I believe that the long-term growth prospect of power exchange sector are intact and there is immense opportunity for more than one company to not just survive, but flourish in the long term. So like I said, HPX addition could be a positive thing for overall power exchange sector growth in the long term. And remember, the market size of power exchange is just 7.6%. So there is huge scope of growth for both IEX and other players to grow. And let's not forget that IEX has now also forayed into your cross-border trade where neighboring countries and South Asian region can trade electricity on its platform. So it has increased its reach to entire South Asian region. IEX has also launched a platform called IGX, that is Indian Gas Exchange, which is the first gas exchange platform in India. It would facilitate and trade in physical delivery of gas. And government's vision of increasing share of natural gas in the total energy basket from 6% to 15% by 2030 will increase gas consumption in the economy. Moreover, IEX has launched multiple new products to expand its product offering. So growth potential is huge. Having said this, there could be a near-term impact in revenue and profitability of IEX. Hence, at this point in time, the better approach would be to wait and watch for the impact of HPX competition on IEX business, and that would be clear in the coming quarterly results. Although IEX share price has already fallen nearly 50% from its peak, it touched a 52-week high of 319 and commanded a PE ratio in the range of 90 to 100, which was not sustainable. But currently, its share price has fallen to levels of 162. Even at current levels, it is trading at a PE ratio of somewhere around 47 to 48, which is on the higher side. However, let's not forget that IEX profits have jumped from 114 crore in FY17 to 303 crore by FY22 at 25% CAGR, which is fantastic. Moreover, since it is a technology play company, it is highly profitable with 3-year average ROC of 61.1% and 3-year average ROE of 47.3%, which is exceptional. On top of that, IEX is virtually debt-free. But whether IEX would continue to command this premium would depend upon its upcoming results. If it is able to sustain its growth, it will command a premium. But if, due to stiff competition or other regulatory challenges, its growth slow down, then it can impact its share price. But like I said, if you are a long-term investor and have IEX in your portfolio, then do not panic with new competitor. I see immense growth potential in the power exchange sector. So keep an eye on the quarterly result and analyze the quarterly result for next 3 to 4 quarters to gauge the growth rate of IEX and accordingly take a call to invest or exit based on its quarterly result. I believe that any fall in IEX is a great opportunity to accumulate for long-term wealth creation. So in this video, we discussed the entry of new competitor for IEX. It has been an undisputed leader in power exchange sector with near monopoly of 95%. And with the introduction of new player HPX, the monopoly of IEX is in danger. Having said this, there are immense growth potential in the power exchange business due to its efficient price discovery model that allows the power distributor to take advantage of market condition and source cheaper power through exchanges to meet the power shortage. An addition of HPX would only help in growth of power exchange sector. And remember that competition to an extent is also good as it fosters innovation. Power exchange has only 7.6% market share in total power sector, so there is a big market for growth. And considering the new megatrends of decarbonization, decentralization, digitization and democratization, power trading is only going to increase. So for long term, IEX looks like a great stock. However, in the short term, the share price movement would depend upon its earning growth and we will only get the clear picture of new competitor based on the subsequent quarterly result. Until then, it's wait and watch story. Now it is time for quiz answer. I asked you to name the company which is a dominant player in Indian auto glass market with a market share of nearly 73% in passenger vehicle segment. Its glasses are used in every 3 out of 4 cars and SUVs in India with clients including Maruti, Hyundai, Tata Motor, Mahindra, Toyota, etc. Well, the answer is Asahi India Glass Limited. Established in 1984, Asahi India Glass Limited is a joint venture between Asahi Glass Company of Japan and Maruti Suzuki. It has 73% market share in passenger vehicle segment in India. In the last 10 years, Asahi India share price has grown from levels of 57 to current levels of 587, generating more than 10 times return. Currently, it commands a market cap of around 14,500 crore and trading at a P ratio of 42. So this is it from my side. I've tried to give a balanced viewpoint about IEX future prospect. Now tell me in the comment, have you invested in IEX? And let me know if you want me to cover any specific stock or financial topic. I hope you find the video useful and do share it with your friends. I'll see you in the next video. Till then, take care.